Good morning, everyone, and thank you for joining us this morning. My name is JP Harris. I want to welcome you to our webinar. We're going to get started in just a minute. I want to let everyone know we're recording this webinar, and we are also going to take as many questions as possible, so please use the Q&A function. Just type them in, and when we get to the end of the presentation, we will try to answer as many of those as we can. This is the second in our 5-part series on data security. Last week, we spoke about transitioning to a remote workforce. You'll see we have a couple more coming up. On November 5th, we'll be talking about privacy policies and compliance issues. On November 12th, we'll be talking about vetting the security of your vendors as we share data with more folks outside our organizations. And on December 3rd, we will finish up with the discussion about hacks, how they occur, how ransomware events occur, and how they're responded to. So you can register for these online at the firm's events page, just as you did today. These are recorded, so if you missed last week's, you can go back and see the recording, and you don't have to wait for the box set or the streaming on Netflix. You can, if you want to binge all 5, you just wait till December, and you'll be able to watch all 5. Today, we're going to talk about cyber insurance. And before we get much further, I just want to do some introductions. Again, my name is JP Harris. I am co-chair of the Data Privacy and Security Practice Group here at the firm. I'm a litigator. About 15 years ago or so, I started to counsel companies on data retention, records retention plans, mostly in an effort to try to get them to reduce the volume of data that needed to be searched in case they were ever sued. But in today's world, reducing data means that you have less to protect, and so those plans have sort of new meaning. I do handle the breach events or incidents for our clients. And the other person I want to mention is Doug Verge. He's the co-chair of our group. Doug drafts privacy policies and assists clients with regulatory compliance in this space. So I want to turn it over for a moment to Tom Mitchell, who's my co-presenter today, so he can introduce himself and you'll have a sense of our backgrounds before we get further into the presentation. So Tom?
Howdy, Tom Mitchell. I'm an IT security geek, nerd, whatever you want to call me. I've been in the background working with security and IT for about 25 plus years. I spent 8 years in the Navy doing electronic warfare on submarines, and then I moved into the IT world for a full-time job post-Navy. And I'm also a CISSP, Certified Information System Security Professional. So I build and talk about this sort of thing. I used to run an MSP, a managed service provider organization, and I counseled and guided my clients in this area quite extensively.
Okay, thanks, Tom. So we are now going to move to the audience participation portion of this. If I can pull this off and make sure everyone's awake, we're going to put a poll up on the screen. We'd ask everybody to click their best response. And the question is, what kind of cyber insurance do you have? The options are, you have a cyber policy that's part of your general commercial liability or casualty insurance. Some folks have standalone policies. And the third is, what is cyber insurance? So we've got a pretty even split there. That's great. Let's I'll share the results for you. Everyone can see that. We've got about a pretty even split, which is actually consistent with our experience here at the firm. All right, I hope everyone can see my screen again. Thank you for participating. So a few introductory remarks about cyber insurance. She and Finney, or in my role as a counsel to companies that go through events, I'm really a user of cyber insurance. When breaches happen, carriers call lawyers very early on to quarterback the process and to sort of cloak what happens after that in the work product privilege. Clients with insurance frequently request that we get involved and the carriers retain us We're also on panels of some carriers, so when events happen and their insureds are involved, we get called in. In our experience, about half of the breaches that our clients have experienced and that we have handled do not have cyber insurance. And about half of that half, or about a quarter, I would consider to be underinsured. Now, let me just say that we get no kickback. We don't sell insurance. We're not in that business. But for reasons we hope to explain today, having insurance is sort of an important hygiene matter in the world that we live in. It's sort of like having your general liability or your property and casualty insurance. And the message we want to try to convey with this is that data security is just like HR or tax compliance. That's the world that we live in. So as a user of cyber insurance, the observation I can make is that there's a significant difference and variation among the policies. They are not standardized or uniform in the way that you might encounter your auto policies, for example. The folks that have cyber coverage that's sort of tacked on or free, quote unquote, free add-on to their commercial general liability insurance, in general, I tend to find those folks to be underinsured. In other words, the insurance doesn't cover the full cost of responding to the incident. And there's, again, the policy language differs from policy to policy. There are some sort of general themes that we'll talk about, but the caveat really for today's discussion is that the language of your policy really matters. And if you're in a business that has a lot of sensitive information, I really suggest making sure you confer with an insurance broker that's really experienced in the cyberspace to get a detailed policy just for you. All right. I wanted to talk a little bit about what happens in the event of a breach, and these are all sort of general top categories of work and services that are generally covered by at least what I'll call standalone cyber insurance. And one of the first things that happens is you call in somebody like Tom, an information security specialist, and they come in, they plug up the vulnerability, they scan systems to try to determine the extent of the problem, and they help collect evidence, which is helpful for the lawyers down the road. When you have cyber insurance, the carriers will have a roster of preferred vendors, if you will. Some of them are quite large, national, very professional outfits. And what you're paying for with your premium, in part, is access to this great roster of specialists that you can bring in, even if you have an in-house IT department or a managed service provider you think is really great. One of the benefits of your premium is the ability to contact and bring in these very capable, professional forensic specialists that you otherwise probably wouldn't want to deal with, but you can bring them in at reduced rates because the carrier has them on their panel. Another thing that happens almost simultaneously is bringing in a legal group to help, as I said, sort of quarterback the process and cloak everything in the work product privilege. The legal team also generally handles the advice regarding the need to provide notices to the affected individuals and regulators. So there's an analysis under the various states' laws that are implicated to determine whether there's been an actual breach, as that term is defined, and the draft notices. Many of the policies get down to the granular level of covering the paper on which these notices are printed and the postage to mail them out. So those are the kind of things that you'd want to look for in your policy. The one reason why the legal costs are what they are is because we don't have a uniform federal privacy law that sort of overarches all that we do in this country. So we have now over 50 individualized data breach and notification statutes. And although there are some similarities among them, they are definitely not uniform. So it's often the lawyer's job to figure out the little nuances. So for example, if you have someone in California you need to send a notice to, the statute requires specific headings. If you have someone in Massachusetts and their social security numbers impacted, you are required by statute to provide credit monitoring, but that's not true in New Hampshire. So the legal team needs to sort of find out how many states are involved and do that that survey and then give you advice. And that those legal costs are all typically covered under the policy. So I mentioned credit monitoring a bit. There is a cost. I'm going to talk to you a little bit in a few slides about the process of how that typically comes to be. But there is a cost, and that's typically covered by standalone insurance policies. They frequently also cover public relations. So if it's depending on what industry you're in and whether there's already, press coverage about your event, you can bring in specialists to help with the messaging. In very large breaches, they also have these call center specialists where within a matter of days, they staff up the number of people you need to answer the phones to be able to handle inquiries from customers and to sort of triage the messaging part of it. So that can be covered as well. Third party liability. So this would be if my Social Security number was exposed and I suffered some harm and I asserted a claim against your company, the insurance policies frequently cover this third party liability. Thankfully, we don't get too many of those claims. The pressing risk when these events happen is usually regulatory compliance with the notification statutes, but it's good to have this coverage in the background too. Some policies will also give what I've referred to here as funds transferred due to fraud coverage. So let me give you an example. We had a client that makes regular payments to independent contractors. They had the independent contractor had filled out a direct deposit form, an ACH form. They went along for many months, and then midstream, an email was received from this independent contractor saying, "Hey, I've changed my bank account. Here's a new form." And of course, somebody had hacked into that person's email account. It was a legitimate email in the sense that it actually came from this person's email account, but they had sat sort of dormant in the email account, found the old ACH form from my client, modified it, put a new bank account number on there, and then payments were more misdirected. So incidents like that might also be covered depending on your policy language. So I'm going to pause here and turn it back over to Tom to speak for a few minutes about what happens when the information security folks come into your space under these sort of emergent circumstances, what it is they want from you, what their process might look like. So let me turn it over to Tom.
All right. So if you have the event of a breach or a crypto event or something of that nature where you need to bring in a third party, hopefully you do have cybersecurity insurance and you already have that list of vendors in your business continuity disaster recovery plan. If you don't, you get to spend the next 6 to 12 hours trying to figure out who you're going to contact and what they can do for you. Hopefully you get time to vet at least a couple different organizations. And it all depends on who's available at the time. Breaches are occurring on a regular basis, and there's a limited number of folks that can respond to events like this. But you're going to be asked some very simple things. Do you have a good, tested, verified backup? And that means your IT folks or your managed service provider or somebody of that nature has done a verification of your backups, and as of 3 hours ago, 10 hours ago, 3 days ago, you have a good backup that you could use. When was the issue noticed? Has it been there for the last 3, 4, 5, 7, 10, 30, 60, 90 days, and people have noticed it, but nobody's actually said anything? Because that goes back to your backups. If they've been there for a long time, who knows the damage they've done and the information that they've stolen from you? Did anybody happen to report that they clicked on a link that seemed that it could be bad, but really weren't sure and they didn't want to get in trouble, so they didn't necessarily tell you until you kind of informed the staff it appears we've been breached? How long do you think this has been going on? Again, time frame is important. These are critical questions that any breach response company is going to ask you. Again, has it been 3 days? Has it been 6 months? The average recovery, or the average breach detection is about 120 days. That's a long time for bad guys to be in your network figuring out what you're doing. Do you have logs of all your systems? This is another one of those business continuity disaster recovery planning pieces of you may not be able to have the best up-to-date security system, but if you have the logs, it helps determine, maybe there's tattletales in the logs that tell you when this event started so that you can begin to piece things back together. And then lastly, do you think it's possible that this is an insider threat? Did somebody in your organization intentionally let them in? Or is it strictly an external event? So what can you do to help your company? If you don't already, you need to build for defense in depth with a layered security model. And that includes the basic things from firewall and antivirus to antivirus, DNS monitoring, endpoint protection, logging, backups, malicious malware detection, everything that you can think of that you can put between your workstations and users and the internet. One product isn't going to save you anymore like it would 15 years ago. 15 years ago, we had antivirus. That was the cure-all. Now it requires a lot more effort. You need to plan to capture and retain all network-attached device logs for at least 12 months. If this is new to you, at a minimum, start with 30 days. Get all of your servers, your workstations, your security cameras, your door fob logs, anything and everything that you can get to dump data to a central repository for later analysis is the piece here. And then as you grow, as your budget allows, grow that from 30 days to 90 days, 90 days to 180 days, with the goal of being at least 12 months. And then duplicate it, because the bad guys are going to be aware of this as well, and they're going to look to destroy it to cover their tracks. So if you have one copy on site and one copy off site, hopefully the off site will remain untouched and won't be destroyed if there's a serious event. And then lastly, have a 24/7, 365 monitoring and response agreement with the Security Operations Center. Most of us can't afford to have the 7 staff members necessary trained in threat analysis and threat response, sitting inside our building, working for us directly. That's very expensive. Remember, 7 staff members at an average cost of $75,000 per staff member in order to have a 24/7, 365 response team. That's a lot of money. Outsource that if you can. Unless you're, a 1,000-person organization, maybe you can afford it. If you're not, look to outsource it. Good to go.
Okay, thanks. So I hope that highlights for you some of the benefits you get by having cyber insurance. You get to bring in experts like that to provide these services. There's sometimes a little bit of a tension between the insured and the carrier about what's remediation costs, what's necessary by the information security professionals to plug up the immediate hole and thereby sort of improve your systems, versus what's paying, which carriers are willing to pay for, versus upgrading your system sort of generally and paying for a whole new system that carriers generally don't want to pay for that. So there's sometimes figuring out where that dividing line is. Sometimes can be a little tricky, particularly in the heat of the moment. But that gives you some sense of what the information security professionals will do for you in the event of an incident. So the question we really wanted to talk about with that background now is there coverage, now that we're sort of moving into the new remote workforce, and on the prediction that we've all kind of gone through this experiment for the last 6-7 months, and there's probably many workers that are going to remain remote, even for health reasons or because for business reasons, it just makes more sense to reduce lease footprints and so forth. What does the remote workforce reality, what impact does that have on cyber coverage? The things we've talked about are generally covered by standalone policies, but let's say what happens if the breach happens at my house, all right? I'm working for the firm and I'm now connected to my own router at home. I'm using some of my home network resources, but I'm connecting to the firm. What happens if I'm the source of the breach and it's really at my house? Will the policy still cover that? And the answer is probably. Now, lawyers go to school for 3 years and we pay a lot of tuition to learn that the answer to every difficult question is it depends. And that's true here. The language in the policy is going to matter quite a bit. But the thinking right now is sort of on a high level and generalizing across policies is you probably still have coverage, even if the event happens at a remote, worker's home. Usually this coverage is based on the type of event and it's not tied to location. But a couple of caveats here. For any of you that have not applied for cyber insurance, there's actually a rather detailed underwriting process. You get a very long questionnaire where the insurer wants to be able to understand its risk. They want to know how much personal information you possess. And so that's sort of a little mini data mapping exercise, but they also want to know what security measures you have, what privacy policies and security policies you have in place. And the more boxes you can check on that form, the lower your premium will be. So getting advice on privacy policies and technology security will provide a long-term cost benefit to you. But the flip side of that is that if you've made a representation on that application that turns out to be false and the breach happened and it was impacted by that falsehood, you might actually blow coverage. Some policies limit the coverage to the company's infrastructure, and I've provided a little note here on this slide. You're looking for language that extends the coverage to employees or independent contractors' devices that are authorized to access your network. It's better to have that language if you can get it. Now, how much coverage do you need? We get this question quite a bit. And we've talked a little bit about some of the major cost drivers. The number of states, right? If we have to do letters for 12 different states, that's more expensive than doing them for 3 states. So the number of states involved is a significant driver. The number of individuals, effectively what we get down to is a mail merge exercise where I give you a template letter and we merge it with a spreadsheet and the letters go out. So there's, the more letters that go out, the more postage. You normally send these out by certified mail, so you have some proof. The length of time that data is exposed, Tom talked about this. The more time that the bad guys are in your systems, the more data that's exposed or exfiltrated. That means more people and more states. Are social security numbers compromised? That sometimes triggers credit monitoring requirements as a matter of law. Sometimes you would do that voluntarily anyway, and there's a cost to that. The size of the system, that impacts how as we'll see in a minute, the cost for the forensic examination. And then if there's ransom, that's obviously a cost you'd have to figure in. The shift now in ransom is that they not only encrypt your systems, but they want money to allow you to get access to your data again, but they're also threatening to splash your information on the internet. And so that they've learned that if you have a good, robust backup, as Tom has mentioned, you don't need to pay the ransom. Well, now they've tacked on, that's great. You don't need us to decrypt your data, but we're going to splash it on the internet if you don't pay us. So let me give you a couple of recent examples that we've handled. This was just the forensic costs for a small medical practice. There was one email account that was compromised, but we knew there was going to be private health information involved. And so we had to scan other systems within the firm just to make sure that the incident was just limited to the email account. And so you can get a sense here sort of what the forensic examination cost in that circumstance. There's a cost to collect, there's a cost to review the logs that Tom suggested you keep, the forensic analysis of the other systems, and the data mining was important for the legal team because they went through all this data and they generate a nifty spreadsheet for me that has the names and addresses of folks and tells me whether their PHI was involved or social security numbers. So that output is useful for the legal team. Another example, this is just legal costs. We had a client that someone inserted some malware between the credit card processing and the web ordering system on their website. And for 2-3 months, someone was siphoning off credit card information. So this involved providing notices to folks in 47 states and 10 countries. So the legal fees you see there are just the fees for the work that we did for the United States notifications, but also to locate foreign firms in those 10 countries to get advice about whether notices were required there. And so there was additional legal cost there. So this example gives you some sense of the scope of the legal costs. The credit monitoring, so the process there is typically we contact a vendor that has a product through TransUnion. We tell them how many people are involved. They generate a 6 or 8 digit PIN that we insert into the letter. So these folks go online, they insert that PIN and they enroll with TransUnion. And then there's a unique identifier, a unique code that we have to mail merge into the letters. So everybody gets a unique code and they get enrolled for 12 months. It's usually a per person cost you see there. The people on the lower end of the range have insurance, and the people on the higher end, the vendor usually charges more for uninsured folks. And it's based on how many people enroll. You'd actually be surprised what a low percentage of folks take up this free credit monitoring service, even when it's offered to them. Here's a very recent event. You can see here the opening demand from on the ransom was $40,000. The quote for the forensic firm to come in and do their work and to help negotiate. You can see that here on the screen too. Let me say one thing about, and Tom's going to touch on this in a minute. One other benefit to having insurance is that, of course, these guys don't take a check. They want to get paid in cryptocurrency or Bitcoin. So if you don't have a Bitcoin wallet of your own, the carriers frequently manage this process for you. So that's an additional benefit. So I'm going to turn it over to Tom again for a minute. He's going to give you a real world example of a ransom event.
This was an event that happened a couple years ago. Firm contacted us to tell us that all of their data had been encrypted over the course of the weekend, started Friday night, finished Saturday type of thing. And all of the computers inside the network all had a ransomware demand saying that they had to pay 17 Bitcoins. At the time, the cost per Bitcoin was $1,750, so $17,500 roughly. But as nobody had a Bitcoin wallet, cost acquisition was going to be approximately 30 grand. They had to rebuild their entire network because they had no backups, they had no data, they had no PCs, they had nothing to actually conduct any business on. It was going to cost about 35 grand. And they knew that their burn rate on their business with having folks not working was $21,000 per day. So their day one cost of this breach was $86,000. They did not have cybersecurity coverage. They did not have any of the insurance or anything to help them recover from this type of event. And as we worked through the case starting Monday afternoon until Friday, their decision was to close the door of the business because they could not come up with the funds necessary to do work to continue business. 17 years, 9 employees, gone in 5 days. Today, 17 Bitcoins, as of yesterday, a Bitcoin was $12,758. So if there were 17 of those, you're talking 150 grand, roughly. Do you have 150 grand laying around?
Right. So thank you, Tom. So that hopefully gives you some sense of how much coverage you might need. And it's not the same for every company. If you don't generate or store a lot of personal information to protect, and all you really have is social security numbers on your employees, which everybody has, that's sort of one thing. If most companies now don't process the credit card payments themselves, so they don't have a need to keep that. But if you have a lot of health information and so forth, you have to sort of figure how much coverage you might need in the worst case scenario. We did have one question posted. If anyone else wants to add one, please type them in now. And the question is, what if most or all of the data is stored on third-party vendor systems, such as Salesforce, Dropbox, payroll protection provider systems, and the breach happens on those systems? Will you still need the insurance? Well, that's projecting ahead for our vetting your vendors discussion. It's going to happen in a couple of weeks. But the next frontier, really, if you will, in the legal aspect is, what does your contract say with Salesforce and Dropbox and your payroll provider? What do the indemnification clauses say? What do the notification clauses say? How is the risk allocated between you and these other entities? The short answer is that if the breach occurs at the vendor level, it is likely the vendor's responsibility to provide notice to the affected individuals. For any of you that are familiar with the Blackbaud event that's been making the rounds over the last few months, you can sort of see how that has worked out for nonprofits that have used that client management tool. But if the event happens somewhere else, really the responsibility to provide notice should really fall to them. But that doesn't mean that they're going to fulfill their obligations, and you may have sort of other client relation or employee relation reasons to want to provide notices. You'll end up having a discussion with your carrier about whether that's covered, because they're probably going to take the position that it wasn't an event on your systems. But I would, if I were a business owner, and I am, to to a degree. I would much rather have this coverage than not. Hopefully Tom's little vignette has conveyed the risks associated there. We have come now exactly to our 30-minute mark. If anyone has any other questions, you have our contact information here, so please feel free to reach out to us. We want to thank you very much for participating this morning. We hope to see you at our upcoming events, and we hope you learned a little bit today. So thank you very much for participating.